Stocks fall. Vishay, Amtech, Impinj, Nova, FormFactor sells plummet amid economic concerns. Wild swings are rocking the semiconductor world, and many investors are wondering, is this a real crisis or just another bump in the road for chip stocks? This morning, shares of Vishay Intertechnology, Amtech, Impinj, Nova, and FormFactor took a nosedive, rattling nerves across the market. But here's what's really driving the chaos and why the debate over what comes next is getting heated. A 1-2 punch to the market. Wall Street woke up to a disappointing jobs report, with U.S. employers adding just 73,000 jobs in July, a massive miss compared to what economists had forecast. Even worse, the government revised previous month's numbers sharply lower, creating a much gloomier picture of the health of the job market. Recession suddenly started echoing in market chatter, because fewer jobs generally mean lower consumer spending, and that could hurt demand for electronics and the chips inside them. But it didn't stop there. The White House dropped another bombshell by announcing new import tariffs, including a steep 20% duty on goods from Taiwan, a powerhouse for global semiconductor production. Given that just about every smartphone, laptop, or car contains chips from Taiwanese factories, this move threatens to increase costs and complicate supply chains. The combination of economic slowdown and escalating trade battles spooked investors, especially since semiconductors are notoriously sensitive to both global trends and economic cycles. Should you fear or see opportunity? Historically, the stock market tends to overreact to big news, especially when fear takes over. Today's steep drops might scare off some investors, but for others, this volatility may actually signal that there are bargains to be found among leading chip makers, provided their long-term prospects remain intact. But is it wise to go bargain hunting in such a tense environment? Some say yes, arguing that panic sells often overshoot the underlying business risks. Others caution that with both economic and political risks rising, cheap can get even cheaper. Spotlight on Amtech ASYS. What's happening beneath the surface? Let's dig into one name that's been hit hard, Amtech. Over the past year, Amtech stock has been on a roller coaster, swinging by more than 5% on 24 different days. Still, today's drop stands out. The market is paying very close attention to recent headlines. A few days ago, the stock actually rose 3.2% in a short-lived bounce, even as it continued an ongoing slump triggered by weak technical signals and lackluster earnings. What's weighing on Amtech? The company's most recent quarterly report disappointed investors, as both revenue and adjusted EBITDA came in below earlier forecasts. Management said a delayed shipment and a prolonged downturn in spending by customers in the mature node chip market also forced them to write down unsold stock, essentially acknowledging some inventory just isn't going to sell at original values. These non-cash charges are paper losses, but they still sting. Since the start of the year, Amtech's value has plunged nearly 16%, currently trading at $4.72. Shares sit about 30% below their one-year high in August 2024. For investors keeping score, if you'd invested $1,000 in Amtech 5 years ago, your stake would now be worth just under $915. Where is the upside amidst the chaos? At Stock Story, we're continually on the hunt for companies powered by unstoppable trends, the kind that have fueled giants like Microsoft, Alphabet, Coca-Cola, and Monster Beverage. Here's what's interesting. Even during turbulent periods, lesser-known winners can emerge. For instance, the ongoing AI revolution is driving growth among select chip makers, some of which the broader market hasn't yet noticed. Want a potential diamond in the rough? You might be surprised at what you can find here. Link. The burning question, overreaction or real trouble. This is where things get controversial. Are these sharp sell-offs just knee-jerk reactions to scary headlines, or do they reveal deeper structural risks in the semiconductor sector? Do you see a buying opportunity, or does this signal harder times ahead for chip stocks? We want to hear your take. Is the market overreacting, or is there real cause for concern? Chime in below. Let's get the debate going. How Trump's tariffs impact Asia and your iPhone, a deep dive. Here's a twist no one saw coming. The very tech revolution that made Asia a global powerhouse is now at the center of a high-stakes trade war. But here's where it gets controversial. President Donald Trump's latest tariff strategy isn't just targeting China anymore. It's sending shockwaves through entire supply chains, from your iPhone in your pocket to the semiconductor factories in Taiwan. And this is the part most people miss. The real victims might not be the Asian economies, but the American consumers and businesses who rely on them. Let's break it down. When Trump first launched his trade war in 2018, he promised to revive American manufacturing and shrink the U.S. trade deficit. Companies like Apple and Samsung scrambled to shift production out of China, adopting what became known as the China Plus One strategy, duplicating manufacturing in Vietnam, India, and Thailand to hedge against tariffs. But now, Trump's new tariffs are closing in on all of them. South Korea's Kospi and Taiwan's TAIEX indexes plummeted recently as investors braced for the fallout. Why? Because these countries aren't just making gadgets. They're building the backbone of the digital age. Take Apple. Half its revenue comes from iPhones assembled in China, Vietnam, and India. CEO Tim Cook recently admitted tariffs already cost the company $800 million last quarter, with $1.1 billion more expected soon. And it's not just Apple. Amazon's marketplace relies heavily on Chinese imports, while NVIDIA's AI chips depend on Taiwan's TSMC. Now, Trump has slapped 25% tariffs on Indian imports and 40% on transshipped goods from Vietnam, essentially punishing companies for trying to avoid the first round of tariffs. But here's the rub. These tariffs could backfire. For example, Taiwan's semiconductor industry powers not just iPhones, but also U.S. military tech and AI advancements. A 20% tariff on chips might hurt American tech firms more than it helps domestic manufacturing. And what about e-commerce? Trump's recent move to eliminate the $800 de minimis exemption for small packages has thrown a wrench into the success of platforms like Shein and Temu. Now, even eBay and Etsy sellers face higher costs for vintage jewelry or handmade crafts. The irony? These tariffs, framed as protecting American jobs, might end up raising prices for U.S. consumers and straining partnerships with Asian allies. So who's really winning here? Trump claims he's fighting for American workers, but in a globalized world, the lines are blurred. Should companies like Apple be forced to build in India when local infrastructure can't keep up? Is punishing transshipped goods fair if it stifles innovation? We want to hear your take. Do you think these tariffs will create the manufacturing renaissance Trump promised, or are they just a costly gamble? Drop your thoughts in the comments below. Semiconductor stocks crash. Lattice, Amkor, Entegris more. Market plunge explained. The recent plunge in shares of Lattice Semiconductor, Amkor, Entegris, IPG Photonics, and Penguin Solutions has raised eyebrows across the investment community. What's the story behind this significant downturn? In a surprising turn of events, several stocks experienced a sharp decline during the morning trading session. This drop followed the release of the U.S. jobs report for July, which revealed a disheartening addition of only 73,000 jobs, far below what analysts had anticipated. To make matters worse, substantial downward revisions to the employment figures from the previous 2 months painted an even bleaker picture of the labor market. Such disappointing news has ignited fears of a looming recession, which could directly affect the demand for semiconductors, the essential components found in a myriad of products we use daily. Adding fuel to the fire, the White House announced new import tariffs, including a hefty 20% tax on goods coming from Taiwan, a key player in the global semiconductor manufacturing landscape. This combination of slowing domestic economic growth and renewed trade tensions presents a daunting outlook for the semiconductor sector, which is known for its cyclical nature and global interconnections. As a result, investors reacted swiftly, leading to a widespread sell-off in the market. Interestingly, the stock market often overreacts to such news, and significant price drops can sometimes create excellent buying opportunities for high-quality stocks. Here's a closer look at how some of the affected companies fared. Lattice Semiconductor, a company specializing in processors and graphics chips, saw its shares decline by 3.2%. Could this be the right moment to invest in Lattice Semiconductor? You can find our comprehensive analysis report here, available for free. Amkor Technology, Nasdaq AMKR, another semiconductor manufacturing firm, experienced a 3.6% drop. Is this the ideal time to consider purchasing shares in Amkor? Access our detailed analysis report here at no cost. Entegris, Nasdaq ENTG, also in semiconductor manufacturing, faced a 4.1% decline. Wondering if now is the time to invest in Entegris? Check out our full analysis report here, free of charge. IPG Photonics, Nasdaq IPGP, known for its laser technology, saw a 3% decrease in its stock price. Is it time to buy shares in IPG Photonics? You can read our in-depth analysis report here for free. Penguin Solutions, Nasdaq Peng, which focuses on processors and graphics chips, dropped by 3.3%. Is this the right moment to invest in Penguin Solutions? Access our complete analysis report here at no cost. Focusing on Entegris, ENTG, it's worth noting that the company's stock has been quite volatile, with over 30 instances of price movements exceeding 5% in the past year. Today's decline suggests that the market views this news as significant, yet not necessarily a game changer for the company's overall business outlook. Just 16 days ago, we reported on a notable drop of 3.5% in Entegris' stock, triggered by a cautious forecast from ASML, a major player in semiconductor equipment. ASML's warning about the uncertainty surrounding future growth, particularly in light of potential new U.S. tariffs, sent ripples of concern throughout the industry. As a bellwether for the semiconductor sector, ASML's insights are crucial indicators of future capital investments, and their caution has raised alarms about the stability of the global semiconductor supply chain. Since the start of the year, Entegris has seen a decline of 22.8%, with its shares currently trading at $75.07, 35.6% lower than its 52-week high of $116.61 reached in September 2024. For investors who purchased $1,000 worth of Entegris shares 5 years ago, their investment would now be valued at approximately $1,014. Are you curious about the factors influencing the companies you care about? Consider adding them to your stock story watch list. Whenever a stock experiences a significant movement, we'll send you a timely explanation directly to your inbox. It's a free service that takes just a moment to set up.